Hello and welcome to Module 8 of the Forex Complete Solution Basic Trading course on the principles of fundamental analysis. With fundamental analysis, we are analysing the markets by looking at economic, social and political data. We are essentially looking for supply and demand, as it will be supply and demand that affects price and direction of the security that you are trading. We have to determine the strength or weakness of an economy based on certain data sets such as unemployment and inflation data. Quite simply, we are using fundamental analysis to gauge a country's current or future economic outlook and then trading accordingly. For instance, the stronger the country's economy is, then the more business and investors will invest into that economy. And we can see now in June 2015 that the US dollar is rising because US economic data is improving. And here we have a chart of the USD versus the Japanese yen. And as you can see there, the upward slope of the USD versus the Japanese yen, and we have our trend line and we have our valid touches, and as you can see, the US dollar versus the Japanese yen is in a strong uptrend. So as the economy improves, we may see a need for the raising of interest rates to control growth and inflation, and this is why right now the US Federal Reserve is looking to raise interest rates. When trading a single stock, your fundamental analysis will incorporate the study of a company's financial details, such as the company's financial health, its potential for profitability, growth prospects, and the value of the company in relation to its share price. You would view the company's balance sheet, profit and loss statement, and cash flow statement to analyze this. When trading Forex, for example, you would need to take a broader view of the markets as a whole. You will need to familiarize yourself with the main central banks and the head of these central banks. In the USA, we have the Federal Reserve and its head is Janet Yellen. In Europe, we have the ECB, or the European Central Bank, and its head is Mario Draghi. These are the figures who implement changes such as monetary policy, i.e. interest rates rises and cuts. When these figures are speaking, take note of the time and date because central banks will move markets, so you'll need to be fully aware of the implications of these decisions. Okay, the Federal Reserve website is www.federalreserve.gov, and here we have it. Okay, and the ECB website is www.ecb.europa.eu. And these websites will give you the key data that you will need regarding economic announcements. They will also outline the monetary policy stance of that central bank. Okay, so for instance, the ECB has a primary objective to maintain price stability. It wants to keep interest rates below 2% over the medium term. So here's our Federal Reserve website. So again, here we have Janet Yellen, and she is the head of the Federal Reserve. So when she speaks, she will be dealing with inflation data such as interest rate rises. Okay, so when is she going to speak? Well, once you have opened the website, just go to News and Events, and here we have our news and events. And not only do we know that when she's going to speak, you can also open a PDF file of her previous statements to get your information of what is current and what is on the agenda right now. And on the agenda right now in June 2015 is the US Federal Reserve are looking to raise interest rates. So the market as a whole is using this data to trade off, because if America raises interest rates, you will see a rise in the US dollar. Okay, as we can see on our weekly chart, and this will also impact equities. You may have a fall off in equities, and this will be because you have a stronger dollar, and this will affect imports and exports. So these are our fundamental reasons why we're looking to take a trade, whether it's bonds, Forex, equities, or our commodities. So you need to be aware of the main central banks. And over here we have our ECB website. So again, it's www.ecbeuropa.eu. And again, if you're looking to see when Mario Draghi, the head of the ECB, will be speaking, go to events, and you will have the schedule of meetings of when the main players in the ECB are going to speak. Okay, so you can just click on the schedules there, and these will move markets. Okay, you need to be aware when these events are happening, because if you're in a live trade and you're trading the euro against the US dollar, or you're trading the dollar against the Japanese yen, and either the Federal Reserve or the ECB are speaking, you'll be in a very volatile market, okay? And the market will be moving up and down before it finds a mean price again. A mean price, I mean, it will find direction and trade accordingly. But generally, when they are speaking, the market will be very volatile, because the market does not like indecision. So when these central bankers are speaking, we never know exactly what they're going to say. We can have a good idea of what they're going to say as the US are trying to raise interest rates, but we don't know exactly when. So for the last few Federal Reserve meetings, for instance, the markets have been awaiting a decision on this. So they're pricing in a September or a January rise, but potentially, we don't know for sure. So again, as this date approaches, the market will trade accordingly. So you have to be aware of these news events and when they're happening. Okay. So again, inflation refers to a general increase in consumer prices and is measured by an index which has been harmonized across all member states. The importance of the expected nominal interest rate to both borrowers and lenders is one of stability. A higher or lower inflation figure introduces an element of inflation risk. An example of this would be the US Treasury bonds. Even though these payments are guaranteed, investors would face the risk of random changes in the dollar's purchasing power. What matters to people is real value, not the quantity of the money they will receive. Therefore, a high and variable rate of inflation will result in a higher or lower return in real terms. So as you can see, even with a risk-free guaranteed return such as a US Treasury bond, the rate of real return will be influenced by inflation and as its impact on the US dollar. Now, in Module 9, Trading the Economic Calendar, we will cover the various data points that will impact inflation. But it just goes to show that inflation won't just impact your position if you're trading a currency such as the USD JPY. It will affect bonds. It will affect the real economy. So this is why we need to keep an eye on the data and when it's coming out. And these websites are all free. You just type in your search engine and you will have the site, all the information from both the ECB and the Federal Reserve. I bring up these two because generally they're two major currency pairs. The euro against the USD, you'll be looking at the ECB, and the USD against the JPY, or the USD against the Canadian. So a Federal Reserve. As we've mentioned before, the US dollar is the currency of first reserve. So this is why it's so important to keep an eye on the Federal Reserve policies and the news events. So this goes back to preparing yourself for trading, okay? And it's another reason why we trade both fundamentals and technicals. Our charts are great for entering and exiting the market and picking our price, but without the fundamental data, the market can have an explosive move. So if you weren't aware that Janet Yellen, for instance, of the Federal Reserve was speaking and the market moved 50 or 100 points, your position could be taken out. So by you doing your homework and knowing that she's speaking on a certain date, you just go to your Federal Reserve Market Committee calendar, you know when she's speaking. So you've done your homework and you're awaiting her to speak. So you can choose whether you want to trade a high volatility trade when she's speaking, or wait till after she's finished speaking and react to the market. Because again, our job as successful traders and profitable traders is to react to the market. We can't predict 100%. Nobody can predict 100% because, as you say, the Federal Reserve and the central bankers, they set policy, and we do not know 100% what they are going to say. We do know that they are looking to raise interest rates, but we do not know that date. So we react to the market. So a good trade, or a good conservative trade, would be to wait till after these people have finished speaking, and once they finish speaking, we have all the data, and then we can react and take our trade accordingly. Okay, so that's one way to trade your currency pairs, or for that matter, it influences equity, it influences everything. Okay, so central banks will influence everything, whether you're trading forex, bonds, commodities, or the equities. Okay, but another strategy when using fundamentals to trade forex is the carry trade. Okay, the carry trade is a strategy where a trader sells a currency that is offering lower interest rates and buys a currency that offers higher interest rates. In essence, you are borrowing at a low rate and then lending at a higher rate. A trader can use this strategy to capitalize on the difference between the two rates. An example of this trade is to be seen during 1999, when Japan lowered its interest rates to almost zero. A trader would capitalize on these lower interest rates and borrow large sums of Japanese yen. The yen was then converted into US dollars, which were used to buy US Treasury bonds, whose rate at the time was 4.5%. So as you can see, the Japanese interest rate was essentially zero, and the trader would be paying very little to borrow the yen and earn a higher yield on US Treasury bonds. So this will give you an idea of how some basic economic and fundamental data can impact and move the forex markets. Remember, currencies, like countries and companies, are constantly changing in value based on fundamental data such as economic growth and interest rate rises or cuts. So your job as a successful trader is to marry both fundamental and technical analysis to create a profitable trading plan. Okay, so you have the fundamental data that the Federal Reserve are looking to raise interest rates, and all you have to do is go to their homepage and go to their monetary policy or their news events, and it's all here for you. You just click down to the previous statements, and they will tell you that they're looking to raise interest rates, and they will tell you that they are only planning to raise interest rates because, for instance, if employment hits a certain figure, then it will be more likely that they're going to raise interest rates. And they are telling us this. So all you have to do is open your PDF statement, and you will have Janet Yellen explaining her plans for the future. Now, again, trading is about timing. So we don't know exactly if she's going to raise those interest rates in September 2015 or wait till the first quarter of 2016. But what we do know is we have her information that she is planning to raise them, and we do have the information of when she will be speaking next, and you can trade accordingly. Okay, so as I say, to be conservative, you can wait until she has spoken and then take your trade. And again, with the ECB, if you're trading the Euro USD, you have all your information here. So you just go onto the website. Again is www.ecbeuropa.eu, and we have all your monetary policy. Okay, so your monetary policy. The primary objective of the ECB monetary policy is to maintain price stability. The ECB aims at inflation rates below but close to 2% over the medium term. So they're giving us the figure. They want it at 2%. So again, to keep it at 2% or just below 2%, what affects this? Employment data, producer indexes, retail sales. And again, in Module 9, we'll be showing you on your economic calendar where to get this data. But the main figure there is the 2% inflation rate. And we have it. So this is how you're going to base your trades. So you have when you're looking at your Federal Reserve, you have your news, and then you go to your technicals, and you can see that the US dollar is in fact rising. So technicals and fundamentals hand in hand at all times. And in our intermediate and advanced course, we will give a full breakdown of global economic events. But as this is a basic course, I just want you to be aware of what fundamental data is and how it impacts your trade and how you have to be aware of it. There's nobody who can just be a technical or just be a fundamental trader. You need to have both. Okay, so you need to be a fundamental trader, you need to be a technical trader, and that's how you succeed and how you implement a successful and long-term trading plan. Okay, because the market is always looking ahead. We do look back to our historical data, but the market is always looking on to the next data point. Okay, and if we look today at our chart here on the Euro USD, we look at our daily chart, and what is our news today in June 2015? The market is selling off, and the big story now is Greece in the Eurozone. So the narrative will always change. So the fundamental data is your narrative. It will tell you what's in the news now, and the technicals will give you your entry and exit points of where to get in and out of the market. Okay, and on your hourly chart here, you can see the gap. Okay, and this gap was because over the weekend, our Greek data, the Greeks said they were closing their banks today, and they were limiting the amount you can take out of the banks. Okay, so this information came out of market hours, so the market gapped down. We created a gap, so the market fell off very hard. Now, if you just open your chart on a Monday morning and you see this gap, why is the gap there? This is why our fundamental data will tell you. Okay, so on a Saturday or Sunday evening, you have your trade plan in place from both a technical and a fundamental point of view. So from fundamental point of view, the market gapped down because of the Greek default situation. They haven't defaulted yet, but the market is undecided. Okay, it doesn't like indecision, so the market it fell off, and now it's looking to fill the gap. So this is why we can use our fundamental data in real time. So last night on a Sunday, you have this information going into your Monday morning trade. This isn't going to surprise you. You have this information, the market gap down, and you take your trade accordingly. You have the two reasons, okay? You have your support and resistance points, you have the fundamental reasons why the market fell off, and you can take your trade accordingly. Now, when you're trading longer term with the central banks, they will give you an economic calendar and you'll have the dates that come out. But sometimes fundamental data will surprise. And for instance, people would have presumed that the Greeks were going to do a deal on Friday. And as we can see with the DAX 30 from the equities point of view on Friday, I will just pull up a daily chart. The market also gapped down hard. So on Friday, the market presumed it was coming into resistance, that the Greeks would have done a deal over the weekend. They didn't, and we can see our gap. Again, so we see our gap on the USD, on the Euro USD, and we also see the gap on the DAX 30. And again, if you pull up your French index, you also see your gap. Okay, so the reason, our fundamental reason is in place. It's the Greek situation. That's our narrative on our Monday morning, and that's how we take our trade. So this is why we're using our fundamentals step by step with our technicals. You have to, okay? You can't just have a gap in your chart here and not know why this happened and what's the next move. Okay, the next move is the Greek situation gets resolved and the market will buy back. If it drags out for the rest of the week and the Greek banks stay closed, what do you think is going to happen? The market will sell off and it will come into these support and resistance levels. So our fundamentals will tell us that the Greek position was solved or resolved or not resolved, and our technicals here will tell us where we're looking to take a trade. So far the market fell off and we're coming into a resistance level at 419. And that is a historical resistance point on our 1 hour chart. Again, we found support here and now it's becoming resistance, as we've discussed in our previous technical module. So again, this is how we're going to trade fundamentals and technicals step by step. and we'll just go back to our website there. So thank you for listening to our module on the principles of fundamental analysis, and I hope you will enjoy module 9, trading the economic calendar, which will expand on fundamental analysis. So thank you very much, and I will speak to you soon. Goodbye.